This podcast is produced by Backroads of Illinois Production and the risk of trading for the futures and options can be substantial. We're glad you're here on the Markets Club. We were going to talk about the markets with Conab from Brazil with Mark Gold from Top Third Ag in downtown Chicago. We were going to talk about the commodities markets and economic. Brazil's soybean production from Brazil with Brian Basting from Advanced Trading and Chip Neliliniger from Blue Reef Agri Marketing out of Morton, Illinois. You can listen to our show on YouTube and Amazon whenever that you get your podcast. We were coming back with our guest with Mark Gold from Top Third Ag in downtown Chicago. Stay tuned on the Markets Club podcast. This is the Markets Club podcast. We were back with our guest Mark Gold from Top Third Ag. Welcome to the show. How are you, Mark?
I am doing fine. Thanks for having me.
What do you think about Brazil's convoy was coming out on yesterday's morning at 6 Central Time? Could you explain to our listeners about these things?
Well, CONAB is the official agency in Brazil that releases their crop estimates, much like the USDA here in the United States. They came out with a corn estimate for production of 111.6 million metric tons, which is a lot lower than the USDA has them at 122. This current number was a little bit higher than last month, but it's still a low number. The bean estimate was 147.7 million metric tons. Again, that was a little bit higher, but under the USDA's estimate of 154. The USDA has been consistently been above the CONAB numbers, but I believe CONAB is closer to what we're really seeing in Brazil. They've had tremendous flooding in the south, very hot and dry in the north, and I believe these numbers could move lower yet.
How about an Argentinian corn crop with the pest?
Well, they've had leaf hoppers down there, and it's certainly taken a toll on some of their crops. The government pretty much left the Argentinian numbers. Let me get them back here. Hold on one second. The USDA has them at 53 million on corn. I think that number is too high. They have an estimate for Argentina beans at 50 million metric tons. Again, I think that may be high. They've had some problems, as you mentioned, with the leaf hoppers. That should take away some of their production. And the soybeans, they've had some problems as well there. So these might be the highest numbers we're going to see for a while.
It's high for them.
I'm sorry, could you repeat that?
It's high for them.
I'm not sure I understand your question, but the weather in Brazil, in southern Brazil and Rio Grande do Sul, they've had incredibly horrific flooding, heavy rains. They're looking at another 2 to 6 inches here in the next day or two, and that is really causing havoc down there. And I think the Brazilian numbers can move lower. In the north, the safrinha corn crop has been very hot and dry. We don't see any real relief there either.
Yes, I heard about that. I have to ask you about the CFTC on Friday afternoon. How do you see it on Friday afternoon?
Well, the corn carryout number is lower than people would have thought. It's down 100 million bushels or so from last month, or not from last month, but from the average guess, it's down 154 million. So that was a little bit friendly out here. The soybeans came in 13 million more than what they were looking for. The wheat, 20 million less than what they were looking for. The production numbers on corn, they're estimated at 14.860. That's down a little bit. The bean number, 4.45 million bushels. That's up 20 million bushels from last month, or from what they were expecting out here. So overall, the numbers are a little bit bullish for corn, maybe a little bit bearish for the beans. The funds have been heavily long meal, 80, 90,000 contracts, and heavily short the bean oil, some 60,000 contracts. The meal has led the rally, but
How did you get the World Agricultural Supply and Demand Estimate report from Friday morning? What is your thoughts about it?
well, we're certainly seeing lower corn world carryouts and lower wheat carryouts. The corn was shaved by 5.1 million metric tons from what they were looking for. The wheat was down 3.3 million metric tons, but the beans were strong, up 8.5 million metric tons. The corn and wheat numbers are a combination of what's happening in South America, as we've talked, plus the freeze and dry weather they've been seeing in Russia and in Ukraine. The Russians came out today and said that their wheat crop is going to be down from 89.6 million metric tons to 85.7, almost a 4 million metric ton reduction. And I think we'll see these world carryouts in corn and wheat continue to move slower or move lower. And the beans, if we do have a good big bean crop, we're going to have to see some demand to offset world supplies. But for the most part, these markets have really been about the fund short positions. They have been heavily short corn, wheat, beans, and oil. If you look at the charts, technically, the funds ought to be long here, and they're still short. As of yesterday, I had them short 87,000 contracts of corn, 15,000 contracts of wheat, 46,000 contracts of beans, and short 62,000 contracts of bean oil, and long 87,000 meal. So they're still pretty heavily short most everything out here, and they're trading in an environment where theoretically the funds should be long. We're over most of the moving averages, and the markets continue to look strong. But we've had a turnaround day here today. We started off very strong because of more problems in Russia, and the markets have since fallen out of bed. Corn is about 12 cents off its highs. The wheat is 34 cents off its highs. The beans are 16 off the highs. So it's not the kind of day we expected, considering the news was pretty bullish.
How about in Ukraine?
Well, Ukraine's a mess. The Russians have been mounting more offensives. They're in the Kharkov area making gains, but it looks like the U.S. is about to send them maybe $2 billion worth of aid to help fight the Russians. But in the meantime, the crops themselves in Ukraine have been suffering from the cold temps, the dry conditions, the war taking its toll. So theoretically, it should be a little bit friendly. Russian wheat prices were very strong this morning, indicative of some of the cheap wheat that's been floated around by the Ukrainians and the Russians may be at an end. But I'm a little bit curious why this wheat market has broken now 35 cents off its highs. I haven't seen any news that would justify that, but it had to be something out there. And we'll wait to see what the news is by the end of the day.
Is there anything would you like to go to be telling our listeners about these cattle markets and counting with the demand is lower from McDonald's?
Well, we expect that, people are backing away from high-priced fast foods. And McDonald's and some of the other big players are going to be hurting there. But demand at the retail level has been incredibly strong. We had box beef yesterday up to about $2.97, but we've got a big disparagement between the cash price and the futures prices. Cash prices are $6 to $10 over the board, and they've kind of disassociated themselves with those prices. It's an indication that ranchers aren't willing to sell cattle cheap, no matter what the futures prices are.
Yeah, I heard about that on Sunday night. It means that the economy is lacking in central demand.
Well, it's lacking for the high-priced foods that we're seeing at the fast food joints. But the American consumer, the American housewife, is still buying beef at the retail level. And the kills and the slaughters haven't been up to pace. So the demand for the meat continues from the housewife level, but not so much at the fast food level.
Mixed emotions for the industry.
Yes, I'd say that's a fair representation.
Finally, what is your thoughts about the acreage report, conab, inflation?
Well, the acreage report, there's talk that because of the weather in the south, we could see some prevent acres in the corn, and they could shift those to bean acres. I thought the original corn number was too low. I thought the original bean number was too high. With bean prices kind of lagging behind here, the corn bean ratio has been about 2.5, which is a fairly standard number, meaning that it doesn't really favor the beans or the corn. And I had a lot of problems with the corn acreage number being too low and the beans too high. We'll see what farmers want to do. But considering the delays we've seen in planting, those numbers may hold true. My thoughts on inflation is it's here. It's not going away anytime soon. They keep talking about wanting to lower interest rates, yet I don't see how they're going to do it with this inflation as hot as it is. As far as conab goes, the Brazilians, I think, do a pretty fair job of estimating their crops. The American attaché in Brazil and Argentina come up with these estimates. They've been consistently high, and I really think that's a disservice to the American farmer. But I think in time, the USDA numbers will come closer to the conab numbers.
The markets are trading in various places for right now alongside with the economic growth.
Well, I don't see any major shortages of corn, wheat, or beans out here. World carryouts are ample. US carryouts are ample for the time being. It's going to depend, the market future is going to depend, in my opinion, on two things. Do the funds want to continue to cover their short positions and get to even and possibly getting long. If they do, these markets are going higher. If we have a La Nina scenario in the if we have a La Nina situation where we get hot and dry this summer, and the odds seem to be fairly high from June to August, it's a 50% chance. From July to September, it's a 70% chance. And if we do get a hot, dry summer, these prices can move higher.
Thanks, Mark.
Well, you're very welcome. Glad to help.
This is Mark Gold from Top Third Deck. We were coming back with Brian Basting and Chip Nellinger. Chip Nellinger from Blue Reef Agri Marketing. Welcome to the show. How are you guys?
Doing good, Cesar.
Doing good, Cesar. Thank you.
Chip, let's start our conversation about the conab report from Brazil's agricultural agency. Could you explain to our listeners, how do you see in the soybean production from Brazil? Brian, you can chop off down as well on yesterday's morning.
Yeah, Cesar, the conab report was a couple days after the USDA report. We got that out this past Tuesday, and the USDA was this past Friday. And conab was at 147.6 on their bean estimate. That compares to the USDA was at 154 million metric tons. USDA a mixed bag. Conab, they did see some losses due to the flooding down there, but they also increased their planted acreage. So, it was kind of steady-ish compared to their last number. It wasn't a big drop. The question is, are there going to be further cuts on conab over the next couple of months due to, getting a better handle on that flooding situation? Now conab had their corn crop number at 111.64. That's well under the USDA, which was 122 million metric tons. That was actually down 2 million tons by the USDA. So that's a big discrepancy. What's that? 7 million on beans and 11 million tons on corn between where the USDA is and conab. And so that's going to kind of take some time to figure out who's going to be right. Does conab rise up to meet the USDA, or does the USDA cut further to get to conab, or do they meet somewhere in the middle? And that's yet to be seen, I guess.
Cesar, Chip did a terrific job there covering. I just add in one more thought that there's quite a discrepancy between the export forecasts for corn between conab and USDA. USDA came out last week at 50 million tons, whereas conab is only at 31. So I believe those crop years are consistent amongst the two agencies. So there's quite a discrepancy there. And that'll be a big turning point in the 24-25 crop year in terms of who's right. As Chip said, perhaps down the road they'll meet in the middle, but for the moment, that 19 million tons is about 3/4 of a billion bushels. It's about 750 million bushels. So quite a discrepancy there.
Yeah, I saw that from the World Agricultural Supply and Demand Estimate report on last Friday morning. The beans were performed poorly.
Yeah, we've had some
results from the conab report, Brian. Could you give your analysis to our listeners?
I think that the big challenge at the moment, Caesar, is how is the discrepancy that Chip described between the production numbers at conab down at 112, I believe, 111.6, and USDA did reduce it by 2 to 122. How is that going to be resolved? There is a very hot and dry pattern that is locked in Brazil at the moment. That's the start of the dry season, and it started several weeks early this year. So some quite a bit of that crop in Mato Grosso, for example, in north had already pollinated before the hot and dry season kicked in, the dry season, I should say. But some of that corn in the south, in states such as Paraná, Mato Grosso do Sul, and so forth, had not reached that stage. So there's some ideas that that crop is vulnerable to decline. So I think that's going to be the story over the next 30 days is will we see losses in the south um, mount and continue to take that USDA number down between now and the June 12th USDA WASDE report. Today, it feels like that could happen. Um, Having said that, it's not a catastrophic situation, but it is something that could cause some volatility in the markets because of the fact that that number is down from last year. Last year was a record 136, 137, somewhere in that neighborhood for Brazil. So will Brazil, how much of a magnitude of a decline could Brazil see in their export picture for 24, 25 from last year's 54 million tons? USDA is down to 50 now. Could that number slide even further with this poor finish to the growing season?
I'm sorry, Chip. Go ahead to back with your thoughts.
Yeah, Cesar, sorry about that. I kind of jumped in before you fully answered your or asked your question there. I think that there's a lot also of weather here that's affecting the markets. Not only the discrepancy between the USDA and other, CONAB and other private estimates out of South America, but it's gotten pretty wet and rainy in areas of the Corn Belt here, and so we've got some pretty healthy planting delays that are happening, and that's been I think front and center on the market here. The next 2 weeks are going to be really critical as to can we catch back up to a normal 5-year average pace on corn? Or are we going to fall further behind? And the funds have been doing a lot of buying the last 10 days, and so weather here is still a big part of this as well.
The markets are trading is pretty crazy.
We have a number of branch offices, Caesar, that work directly with producers throughout the country in most of the major producing states. And we rely on those individuals to give us a planting update. And they do a terrific job. They cover a lot of ground, not every single acre, obviously, but cover a lot of ground in the major producing states. And we rely on them to give us an indication of whether or not they think, for example, if the USDA is too low, too high, whatever the case may be, and they help us to project next week. The one issue that I'm picking up this week is that an area that we need to keep a close eye on is the Eastern Corn Belt, and that's an area that encompasses, I would say, Northeast Indiana, Southeast Michigan, Northwest Ohio, because that area is behind. They've got a little window here of opportunity to plant between now and I'd say about Monday. But if you look at the extended NWS forecast for next week, it looks quite wet from Tuesday beyond. So how much can they get done between now here on Wednesday afternoon and Monday night? We got the best producers in the world, but if the ground's not fit, it's not fit. But the sources that we use, Caesar, to answer your question is we rely on our branch offices throughout the country. They do a terrific job for us. And it certainly is going to be something the market watches intensely here the next week or so.
How is the CFTC report from Friday afternoon chipping the corn complex and the funds?
Yeah, we've seen the funds come out of a lot of their short positions here. Not all of them, but the majority of them. If you go back 3 months, the funds were, I don't know what the max was, but say they were short 260, 270,000, maybe more than that. And the last 2 weeks, they've come out of a lot of that. They're still probably net short. I think it was around 80,000 contracts as of this previous Tuesday. They've done some buying since then. And so they're getting that whittled down to where it's not a very big position on the short side. The question is, will they continue to come out of that and go ahead and build up a net long position? Usually they flip from one extreme to the other. And I think the planting weather the next 2 weeks is going to be, tell the tale on part of that. But they've certainly come out of a lot of their short positions and have evened up several of those going into this uncertain planning time frame.
It's been swamped for this year's event.
All right, I muted myself. Thanks, Chip. I appreciate that. I just share one or two thoughts on that, Cesar. We're looking at USDA's WASDE report from Friday last week, and we did see a slight increase compared to last month in terms of the 2024 beef production. It went from 26.5 billion pounds to 26.7 billion pounds. So, but I would add that next year, for calendar year 2025, beef production is forecast to decline 5.5%. So, for the moment, the USDA is forecasting via a combination of number of factors, but smaller cattle crops here, calf crops, beg your pardon, here and there. But a 5.5% decline in beef production next year is significant. So for the moment, I would say that's constructive for the cattle market moving into 2025. That's a long way off, of course, but we'll keep a close eye on things moving forward. Just the final thought I'd have on the cattle market short term here, Cesar, is that we're finally seeing some life in the box beef market as the grilling season kicks in here. Weather gets nicer and so forth. But that's given the cattle market a little bit of a push here. Going forward, that'll be critical to see how that stands up with consumer demand. A big question mark now with inflation going on and some of these other things. But for the moment, constructive trends in box beef prices and constructive trends from the USDA in terms of looking down the road for production of beef next year.
Chip, what is your sources of information about the cattle markets?
Yeah, like Brian said, things are tight. Even after 3 or 4 years, 3 years probably of drought conditions in the plains, and having some of those areas at least, particularly eastern Kansas and some of those drier areas where some of the pasture ground is, have got some nice rain over the last few months here. You're just not seeing the expansion and the heifer retention. So we really have tight supplies out there. It probably ultimately comes down to whether the high price of beef can maintain the demand base. Our exports have been pretty good. The domestic consumer has been holding it together, but you just wonder how long that the domestic consumer of beef can hold that together with other prices increasing and still under some pretty powerful inflation. So that demand base is part of it. But, as Brian mentioned, the sheer numbers look like things are going to stay tight for the foreseeable future. And, the easy environment for cattle to rally, assuming we can hold the demand together.
Is there anything would you like to go to be telling our listeners about these cattle markets and counting with the demand is lower from McDonald's?
Well, I could jump in. I would just say from a producer standpoint, we also have this threat of avian flu and,
Mhm.
The big unknown there. So, there's more equity and net worth on the line than there ever has been in the cattle market with essentially record prices here. So it's more important than ever to have a risk management plan, even if that's some out of the money puts to.
Finally, what is your thoughts about the acreage report, conab, inflation?
I would just echo some of Chip's thoughts there, Caesar, not only in the cattle market, but obviously now with our grain growing season in full flight here. Hopefully we can get the planting completed here the next few weeks. But risk management is critical when we're looking at some challenging times this year in terms of returns to producers compared to the last few years. A critical time here in 2024 for producers to defend their balance sheet, to utilize the marketing tools available to them. In my opinion, options are a good tool to use in these volatile markets. For example, to use a put option to put a floor underneath the market, but leave the flexibility for the market to rally on the upside. But regardless of which tools a producer is most comfortable with, I'd highly encourage producers to closely examine those tools. Two main reasons. Number one, USDA's balance sheets are forecasting an increase in carry out for next year for 24-25, more significant for beans than corn, but regardless, a 2.1 billion bushel carry out for corn for 24-25 is ample compared to these last several years. And the other thing I'd remind growers and your listeners is that we had a really rough start, if you will, to the growing season, at least a dry start to the growing season in 2023. And there was a lot of producers, for example, here in central Illinois who were very concerned about the crop. Bottom line is, though, we changed the weather in July, and the bottom line is that the genetics are something that I think we have to respect, those trend yields that the USDA used at 181 for corn and 52 for beans. Some of that will be contingent, of course, on the remainder of this planting. I don't want to totally disregard that, but hopefully we can get the planting completed in a reasonable, timely fashion. The best producers in the world and the genetics that we have, we could raise very large crops this year, despite the smaller acreage in corn than a year ago. So there is upside potential here, volatility as you get into the summer every year, but there's also downside risk. So risk management, front and center, defend your balance sheet, and find a tool that you're comfortable with using.
Thanks, you guys, on today's podcast.
You bet. Thanks for having us, Cesar.
Thanks for having us, Cesar.
This is Brian.